Hi guys, welcome to an academy. Okay, this is the series we started few days back. Okay, and yes, sorry due to the power cut issue in Bangalore, I didn't able to take this course. Yes, at 4 o'clock. Now I am continuing this. Yes, I will start this where here we are discussing the questions on monetary policy and banking sector with detailed analysis so that we will finish this monetary policy and banking sector. Okay, by yes, in 7 days we will finish this monetary policy and banking sector, which is very important for prelims, especially in economy subject. In prelims this is very important. We also discussed a few questions, and this is presented by me, Rajshekar. Yes, we also discussed a few questions. We'll discuss the next questions. Yeah, see here, what I'm doing is we are discussing the MCQs on monetary policy and banking, and we are clearing the concepts by doing the holistic preparation. Okay, we discussed this. Who was the chairman of public sector banks? The chairman of the public sector banks are selected by whom? Okay, we discussed this. Yes, the next question: the economic cost of food grains to the Food Corporation of India is the minimum support price and bonus paid to the farmers plus what? Okay, see, you know about PDS system, you know about public distribution system. Yes, in public distribution system, what happens is they will give these grains for low rates in ration shops for those who are below poverty line. Okay, yeah, this we can call it as food subsidy. Okay, to give this food subsidy, to give this grains at the low rates. Okay, like wheat. Yes, like wheat and the rice, paddy, anything. Okay, the economic cost of food grains to the Food Corporation of India is the minimum support price and the bonus paid to the farmers plus what? What it includes. Okay, you can tell me this in the chat section, in the live chat section. Yes, what is the answer to this? Okay, yes, it is the minimum support price and the bonus paid to the farmers plus procurement incidentals and distribution costs. Yes, for the yes, for the economic cost of those food grains to the Food Corporation of India. Okay, yes, good. Then okay, we'll see only those which are important for monetary policy. Okay, and the banking sector. Okay, okay, tell me this. Which of the following is issued by registered foreign portfolio investors? Registered foreign portfolio investors. Okay, to the overseas investors who want to be a part of Indian stock market without registering themselves directly. Okay, if foreigner want to invest, if the foreigner want to invest in Indian stock market, he should register with SEBI. Okay, even he is not registered with the SEBI, even then he can participate in Indian stock market. But he should have something. What is that? In these following four options, what is that? Which of the following is issued by registered foreign portfolio investors to overseas investors who want to be a part of Indian stock market without registering themselves directly with SEBI? Okay, anyone? You can tell me in the comment section what is the answer to this. If they are not registered with SEBI, even then they can invest in Indian stock market. Okay, but to invest like that, they should have something called as participatory note, or we just call it as P note. Okay, yes, I remember this. Okay, next question about purchasing power parity. Okay, first you should know what do you mean by purchasing power parity. Yeah, about purchasing power parity, read the following statements and give me the correct answer. See, purchasing power parity exchange rates are calculated by comparing the prices of the same basket of goods and services in different countries. This is your previous year question paper question. This is your previous year question paper from economy, where they asked on purchasing power parity. In terms of PPP dollars, India is the sixth largest economy in the world. Okay, consider both the statement, which is true, which is false, and give me the correct answer. Anyone in the comment section? Okay, first I will tell you what do you mean by PPP, purchasing power parity. Okay, see how much power your currency, how much power your currency have to buy something. Okay, I can give you the example. Consider in US you will get one coffee for $1. Okay, in India you will get one coffee for consider 20 rupees. Okay, what is the current dollar rate? Around 75 rupees. Yeah, okay. So here here in US, okay, this $1 can buy one coffee, but here only 20 rupees can borrow one coffee. Okay, so if we compare this coffee rate in US and in India, considering both the quality is good, both the quality is same, then here the purchasing power of rupee is more than a dollar, because see, only 20 rupees buying one coffee, but here it's 75 rupees buying one coffee in US if we convert the dollar into rupees. Yes, okay. So whenever you want to compare this purchasing power parity between two countries, you should take the same basket of goods and services. I took coffee in both the cases, yes. In terms of PPP dollars, India is not sixth, third largest economy in the world. This is wrong. This is correct. It's one only. Is it clear? So first you should know the concept of PPP. What do you mean by purchasing power parity? Yes. Okay. Good. Next question. Which of the following is not most likely measure the government or the RBI to take to stop the slide of Indian rupee? Okay, what do you mean by slide of Indian rupee? I told you today $1 rate is 75 rupees. Next day it becomes 80 rupees. then it's slide of Indian rupee. Okay, a simple example: if yes, the rupee becomes less value in terms of dollar, then it is a slide of Indian rupee. Okay, to avoid this slide, what is not the most likely measure to stop the slide of Indian rupee? Okay, yes, anyone in the comment section, you can tell this in the comment section. To stop this slide of Indian rupee, okay, curbing the imports of non-essential goods and promoting exports, this they should do. But I'm asking what they should not do. Encouraging Indian borrowers to issue rupee-denominated mutual bonds. No, like even easing the conditions relating to external commercial borrowing following expansionary. Yes, if we ease the condition related to external commercial borrowing, okay, then many private players will take the loan from foreign countries. Okay. If that happens, this rupee will slide more. So this they should not do. Easing the conditions relating to external commercial borrowing, they should not do. Yes. Okay. Good. We'll see the next question. Yes. Consider the following statements about RBI. Okay. RBI of India recently in recent directives relating to storage of the payment system data, popularly known as data diktat, command the payment system providers that okay, recently it is a current affair news. It was like, see, I will give you the example of Google Pay. Where is the headquarters of Google? It is in US. Okay, but Google Pay is taking the payment data of the Indians. Okay, if they are taking the payment data of the Indians, okay, yeah, what they should do, what are the rules we have that they should ensure? Okay, read the following statements and give me the correct answer. See see the first statement: they shall ensure the entire data related to payment system operated by them are stored in the system only in India. Yes, what we want is whatever the data you are taking from Google Pay, that you need to store in India only. You can't store it in your headquarters, that is the Google headquarters in US. No, you should store that in India only. They shall ensure the systems are owned and operated by public sector enterprise. No, even the private sector can own those, but it should be stored in India only. This is the only condition they had. They shall submit the consolidated system audit report to the CAG by the end of the calendar year. Okay, no, okay. CAG have many other objectives, many other functions. CAG won't do this. Okay, it's one only. Remember. Yes, is it clear, guys? Yeah. Tell me in the comment section, is it clear or not? Yes. We'll see the next question. Yes. What do you mean by money multiplier? Okay. What do you mean by money multiplier? Even this is asked in previous year. The money multiplier in an economy increases with which one of the following? How the money multiplier in the economy increases with which of the following options? Okay, anyone in the comment section can answer this. Okay, yeah, the money multiplier increases with increase in the banking habit of the population. Okay, not by increasing in the statutory liquidity ratio, not by increase in SLR, not by increase in population, not by increase in CRR, by increase in the banking habit of the population. So what do you mean by money multiplier? Money multiplier means the transfer of money from one hand to other hand. Okay, the transactions. If the more transactions are taking place in the economy, then the money multiplier will be higher. Is it clear? If there is more number of transaction happening in the economy, then the money multiplier will be higher. Okay, yes. So if there is increasing banking habit population, people will withdraw the money and they will transact with the banks and the other customers in the economy. Okay, then the money multiplier will increase in the economy. Okay. In a given year in India, the official poverty lines are higher in some states than in others. Official poverty lines are not same in all the states. They are higher in some states than in others because of what? Okay, anyone? You can answer this in the comment section, in the live chat section. Okay, it is because the price levels varies from state to state. Okay, how we calculate the poverty line? If they are not able to buy the basic needs, if they are not able to buy the food, the grains, then they will be considered as below poverty line. Okay, because the level varies from state to state. Okay, the poverty lines are higher in some states than in others. Okay, yes. Good. We'll see the next question. Okay, see, this was asked in previous year. This is a tricky question. If you withdraw 1 lakh in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be what? I am going to the bank. I am withdrawing some 1 lakh money from my account, from my savings bank account. Then I am still in the bank. Then what is the immediate effect on money supply? What is the immediate effect on the money supply in the economy? Okay, you should know these values M1, M2, M3, M4, which are the components of money supply. Okay, what happens? Usually we will consider M3 to calculate this. M3 means M1 plus time deposits with banks. That is what do you mean by M1? Currency held by the public plus demand deposits plus time deposits. Okay, so the money is in demand deposit. If he withdrawed from the bank, okay, then it will go to the currency, but there is no change in M3. It will just transfer it from demand deposit to currency. There is no change in M3. The correct answer is to leave it unchanged. It will leave this unchanged. Okay, yes, good. Good, anything and everything good. See, uh yeah, for more sessions like this daily. Today there was a power cut issue in Bangalore. That why I didn't able to take it at 4 p.m. Daily from 4 p.m. I'm taking this class on economy daily at 4 p.m. where now I'm taking on monetary policy and banking. We will discuss the questions on monetary policy and banking, and we will clear that monetary policy and banking topics in 7 days with MCQ practice. Okay, yes, That's all for the today's session. From next session, we will meet you at 4 p.m. sharp from tomorrow. Yes. Okay. Thank you guys. Thank you for this. Good night.